Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello friends, checking in on the market. We will do the commodities in a separate video either tonight or tomorrow. And the biggest event in this coming week is the FOMC on Wednesday, 2 p.m. Eastern. That's going to have a significant impact on the short-term action. And right now, the burden of proof remains on the bears to show us anything in this market. Want to make a correction. In the last video, I said the S&P 500 was at the all-time high. That is not the case. SPY hit the all-time high. And SPY is an ETF. And 302.23 was that high. We broke it by 23 cents. If we look at SPX, which is the cash level of the S&P 500, 30.28 was the high, and we got up to 30.21 essentially. So watching that double top, because it is still a double top, that's not concerning to me unless we lose the daily uptrend. If we lose the daily uptrend with a double top at the all-time high, then the bears need to start, or we need to start paying attention to the bears, is what I meant to say. So anything on the daily time frame above 295.97 is a higher low. So the bulls have some space to work with. Daily inside bar on Friday. And if that breaks bearish on Monday, we'll be looking at the potential of some profit taking as we head into the unknown event of the FOMC. And I'll talk a little bit when we get to the financial sector about a potential trade setup and how I trade based around unknown events, whether it's earnings or commodities, inventory reports, or the FOMC. So IWM has been a raging bull, and if you've been watching over the past 2 weeks, you remember me saying that if we're going to see the S&P 500 have a chance at all-time highs, we have to see IWM and XLF and the weaker sectors change their daily trends. And of course, we saw that with an IWM daily trend change that just resulted in an explosion to the upside. 159.23 was resistance, and that has not broken, so that resistance still stands. That's the highest price we've seen in months, and if we reject from that level, that's a good top fishing level to be looking again just for a daily higher low. So a bearish reversal shooting star candlestick on Friday. Have we lost the hourly uptrend is the first thing I always want to know. And you could say that yes, we have. We hit the high of the day, low of the day, lower high, and actually I take that back. We didn't hit a lower low at the end of the day. So we would have to break the low of today, the low of Friday on Monday to lose the hourly uptrend. If that's the case, we look for a daily higher low to form, because anything above 146 is a daily higher low. The bulls have a ton of space to work with to keep that daily uptrend. Bulls would be hoping for a bull flag scenario. Let's say we do consolidate to start the week. This would be a cup and handle, where we have the cup, the inability to break resistance, healthy consolidation for a few days, and if the FOMC had a bullish reaction, we'd be looking at the cup and handle breakout on IWM. QQQ already pulling back. The daily higher low is 188.91. So that's the must hold level. How this consolidation looks is going to determine whether we just look for a daily higher low and continuation, or if the pullback is more significant, we're going to watch for a head and shoulders pattern, which just means watch for the loss of the daily uptrend. So if we pull back, let's say down to 191, we still have the daily uptrend intact, but the bounce from 191 may not be able to see continuation over 194.71, and then rolling over would lose the daily uptrend. So that's something we're going to be watching as well, dependent on how much consolidation we see from the recent high. XLF has been on absolute fire. So again, we had to see the daily trend change. Two birds fighting just startled me and threw me off my flow. So we have a daily higher low and higher high. What I would expect is profit taking into the FOMC. Why? Because over the last 8 days of trading, we have seen a massive move. The entire sector is up 8% in just 9 days trading is what it is. So that's very notable. And if you are going to be thinking about this from the perspective that you are a bull who has profited in the last week of trading from the financial sector, you're going to be thinking, probably time to take some profit. We're heading into an unknown event for the FOMC that's going to have a significant impact on the financial sector, and we could very easily drop down a solid amount. So same thing, if we're heading into an earnings report, and I use it on the shorter term time frame, but let's say the daily chart is overextended heading into the earnings report, and then we start the morning, the day of earnings after hours, and we continue strong, I'm looking for a bearish entry because I'm looking at bears to view it as a discount. I can get a bearish position, and we've already run this hard, and a lot of the bullish response to earnings is going to potentially be priced in. Or if I can view it as a bull, if I've seen this much profit in the short term, I'm going to lock some of that in because we could very easily have a bearish reaction, and I don't want to risk those gains. So we are going to be looking for a pullback on the financial sector within the next couple of days, in my opinion, before Wednesday. And I was keeping an eye out for it on Friday and didn't see any kind of follow through because the hourly uptrend remained intact. We hit the low of the day after a little profit taking, new high of the day, higher low. The hourly uptrend is still strong. If we lose the hourly uptrend, we look for a daily higher low to form. There are different ways to play the financial sector, bullish and bearish, based on leveraged ETFs. They don't have ideal liquidity, but they certainly are liquid enough. And the ones I am thinking of are FAS, and FAZ. So FAS is the bull. So if I'm looking for a pullback, FAZ, keeping an eye out for the potential of an oversold bounce. And that's interesting. I have not looked at this chart yet. So look at FAZ. At the end of the day, from noon to the end of the day, FAZ, the bear for the financial sector, is going up. And let's look at the financial sector at the end of the day. And it was pulling back from about noon, so that makes sense. But we had a solid little bounce there at the end of the day after 315. And there's the pullback. Okay, it just looked to me like we were seeing more strength in the bear ETF than we were seeing weakness in the underlying sector. But it's not as clear as I thought it was. So it does make sense with how they are trading relative to each other. So XLV is pulling back already. We're looking for a daily higher low compared to 89.02. Resistance is going to be 92.38. And we'll see if the bulls can keep this little daily uptrend in their favor now that we have broken some resistance levels. Biotech sector, daily inside bar, real tight range trading sideways. And if we see a bear break of the double bottom, 82.23, 82.21, daily consolidation will be underway, and we'll look for a higher low to form. So I am still watching. I'm watching the bear financial sector ETF. I'm watching LABD. If we break this inside bar bearish on XBI, I'll be keeping an eye on LABD Monday, and also TZA. TZA is trying to get some bounce going 2 days in a row. We've just had a lack of follow through. So I am still interested in a bounce on TZA to look for a daily lower high to form. This is all if we see profit taking heading into the FOMC. And in my opinion, the sector that is most set up for that scenario is the financial sector. Let's look at the VIX. VIX keeps pulling back little by little. Anything under 1650, just a daily lower high, keep dropping down to lower lows. And you better believe that, again, same psychological mindset. Traders are going to be looking to get into the VIX to either hedge their long-term portfolios or to look for some increased volatility heading into the FOMC. So keep an eye on VIX, TVIX, and UVXY on Monday and Tuesday. So that's where we stand. Again, me personally, I love being all cash for events where I have no idea what the reaction is going to be, because if I'm not all cash, I'm gambling on whatever the reaction is going to be. And I like to gamble when the odds are in my favor with favorable setups. So I will certainly be watching the Monday, Tuesday action and potentially make some trades based off of the FOMC coming on Monday, Tuesday. But otherwise, on Wednesday, I will be waiting until after the FOMC reaction before I start trading again. So I appreciate you watching. Have a good weekend. I put out an intro to USMJ presentation that I did, 90 minutes long. It's on the YouTube channel if you have interest in learning about that sector. It was designed for people that aren't really familiar with the stock world, so perhaps that can be useful. See you soon. Have a good rest of your Saturday. I attached some videos here at the end of the ducks when I first got to the property and the ducks when I last saw them, and just getting ready for them to fly south for the winter at any point in the near term future, but a really interesting comparison at what a difference 4 months makes.
It's a party. It's a bird party.